Welcome into the channel, folks. Trade Instinct, this is Paramay. I'm going to kick this Friday off, this Friday evening off. It's about 6:30 Mountain Time here. This is the first report we've done in some time, at least video edit wise. And just to clear it up, we do hold a Discord group, so if you'd like to stop in there and talk Commitment of Traders report or commercial interest and open interest, to help align yourself with the proper side of the trade, the profitable side of the trade, come on in. I think we'll probably put the link somewhere in here in the first part of this video, so go ahead and click it. I'm just going to get through the boring stuff first before we look at the charts. So we generate this report each week. We come up with the data, we come up with the numbers, and then we import it into our indicator in Thinkorswim platform. So if you're fortunate enough to have TradeStation, I believe it is, Larry Williams is the brainchild behind the index that we're going to work with for commercial interest. So yeah, come join us in Discord or take a look at Larry Williams and his stuff. If you haven't read his books, really good material, really good material. So this is what we base our leading indicator on. Not the only indicator that we use, but it is our leading indicator, is the leading indicator that I use for commodity trading. So let's just jump right into it. So we're actually really kind of excited about this. We've just added the 1-year index to juxtapose to the 6-month index. 6-month for me is it's kind of the index that I look at first before anything else. It's nice to have the 1-year index. What we have noticed just recently is that there is quite a bit of correlation between the 6-month and the 1-year index for commercial interest, mostly because of the market volatility lately and the extreme highs and the extreme lows. But we do a sort order for the 6-month index here. We're just looking at the bottom of the list. So the most negative outlook, we've been paying attention to this just recently because the market is turning a little bit here, especially in the currency department. You'll notice that the New Zealand dollar, Swiss franc, the Eurofx, the Australian dollar, all looking pretty bearish on the side of commercial interest. And the dollar index, and we've known what's been going on with the dollar index, is that gosh, it's been plummeting. I think it hit somewhere near the 24 mark today. So that being said, all the other currencies seem to be on a tear right now, but commercial interest not holding a positive outlook. We got a lot of negative territory extremes, if you will, and most of them seem to be currencies, and so we got some grains mixed in there in the energy sector. Feeder cattle is something that we'll look at too. That's posted new lows. So for you folks who don't know, on the index, anything under 20% by commercial interest is considered extreme territory. So they're posting really low numbers in terms of net short positions. And if they're posting zeros, that means they're setting new net short lows or new net short highs, if you will, for the 6-month or for the 1-year index. Swiss franc posting a negative number. So while the 6-month index and the 1-year index here are automatically updated based on the minimum and the maximum value, the 3-year index is something that we have to do manually, unfortunately, because we get our data from bar chart, incorporate it into the report, and we do our searching and indexing based off this. But they only give us 1 year of data, so we're looking into doing something with the 3 years amount of data. But as it stands, we only load about 1 year of data on the indicator for Thinkorswim, mostly because it kind of bogs it down. We don't have a data set to work with, so we've got to do all manually. But if you're looking like you might want this report and you would like the indicator, stop in a Discord, send me a direct message, and we'll see what we can do. All right, so let's look at some charts. So we're going to look at the bottom of the list right now. And just fair warning, get comfortable. This is going to be a long video, but I think it's worth it. I think it's going to be worth it this week. And it's good to be back doing video analysis here with commercial interest. So bottom of the list. One thing I've been following pretty closely is the Eurofx. Australian dollar, Eurofx, two commodities I've been looking at. So let's take our understanding of commercial interest and open interest and see what we can find. And let's just do a quick peek. Let's take a quick peek at the Eurofx. Let's see what's going on with that. So this is our commercial interest chart here. Let's see if we can get a pretty darn good look at this on the daily time frame. All right. So what do we notice? Quite interestingly enough, with the Eurofx, as price starts to climb higher, this open interest is shooting up here. So we're at relative, and relative is a loose term here for open interest highs on the Eurofx. It is very high right now. It is very high. It's climbing quite a bit. 644,000 contracts seem to be open here. And what we know about commercial or open interest here is that when open interest climbs this high, there's a tremendous amount of shorts that are being increased as well as the longs. So we've got a lot of longs that are being increased and a lot of shorts. So the commercial interest, as we know, are loading up on their short positions right now as the Eurofx climbs up here. So we had this nice range that we were working with. And how would we have known that this is going to break higher? We knew this was going to break higher because of the decrease in open interest here. So we've got a nice defined range that we were trading in for probably, it looks like maybe 2 weeks or so. Much longer than that, huh? Into July here. So we see open interest drop like this. The expectation is that this isn't going down when we're in a defined range. That the expectation is that this is going to move higher, and we did. So was commercial interest, kind of on the almost at extreme territories down here below the 20% range before they really started to turn on the short positions, the net short positions. So WPR climbing relatively high. We are up in that overbought territory. Commercial interest, very negative outlook on this, coupled with the increasing short positions here. Eurofx, it can still run, but they're holding short up in this area. How high can it go? Who knows? What we do know is the dollar index. Commercial interest is really bullish on the U.S. dollar right now. So if we look at the commercial interest right now, we can see this correlation here. Just before the drop here, they were getting extremely bearish on the 6-month index, and price turned the other way. Commercial interest is getting really bullish in this defined area. We don't have an open interest for the dollar index on this dollar index, but this is relatively low as it is. Relatively low. So what does this mean for the Eurofx? Well, if the dollar turns around, it could potentially mean spike top look for the Eurofx. That being said, too, Monday is going to be the day that the government here releases some information on the stimulus bill that's going to be distributed to the states. So this could have a huge impact on the American dollar in the upcoming week. And so there wasn't really much warning here. Wasn't a tremendous amount of warning here, except for this pivot. All right, so we've got a higher low, lower low, and a higher low, and we traded straight through this daily candle, and off we went to the races. So we had a nice spike bottom here. Will we get the same type of spike bottom on the dollar? It's quite possible. We are in the oversold territory, and comms are really bullish on the American dollar right now. And you will find quite a bit of correlation going on with the Eurofx and with the dollar. So this is one of my favorite things to do in TOS is move open interest out of the view here. I don't know why this happens all the time, but it does. It's just something that we have to deal with. So looking at the Eurofx, start to think about what a short position might look like and what a spike top might look like if the dollar starts to turn, because comms are really, really, really bearish on the, here's the 3-year index. Both the 3-year index and the 6-month index are really bearish on the Eurofx. So I'll be looking for a turn there. It's nice to see these numbers up in here. And commercial interest is not a timing tool, but it does let you know where the money is. And this is where they're placing their bets right now. They're placing their bets that the euro is going to be turning around here. And this is something new that we did too, is we linked between our commodity symbols here. And you can see posting new lows this past week. So they're really holding short here, and they have been for some time. So even though not a timing tool, they have been holding a little bit more net short underneath the 20% mark is extreme territory. And within the last, looks about a month and a half or a little bit less, they're holding strong in a negative outlook perspective. Okay. So let's look at the top of the chart here, and let's look at the Swiss franc. So they have, again, holding pretty fairly negative outlook on the 6-month index till just recently, within the last 4 weeks. What is this saying? Eurofx is looking bearish on commercial interest. New Zealand dollar, Australian dollar. I don't think the Canadian dollar is up here, but quite a bit of shift in sentiment from the earlier part of the year, and now posting new lows, and posting new lows on for the last 2 weeks on the 3-year index as well. So let's take a look at the Swiss franc on the chart here. So a similar scenario here, and this should go without saying with open interest when we look at open interest. So we're approaching this defined range, and we see this drop in open interest here. The expectation is that this is going to move higher. So it wasn't really a defined range, right at the first part of this this value range high and the value range low. But what we like to see in combination with declining open interest is typically, a hike in sentiment, a positive outlook. So we did get a drop in open interest, shorts closing, and a more positive outlook. Net short or net longs increasing, but still underneath that 50% mark. We like to see it at extremes. We saw it at extremes back here on the 6-month index, and the Swiss franc, and these guys got ahead of this. So this was the a week or two prior. Commercial interest really soaring here on the index, almost setting new highs in the 6-month index. Right. So what does that look like? Also in terms of open interest. So here's the declining open interest that we see here. Declining. This means that the short positions are closing out. They're expecting a move higher. Right. And we got that that scenario. So then we see again here, open interest, shorts increasing a little bit here, and then the drop down as shorts begin to close out, because these are the contracts that really move the open interest. When we have a high volume of shorts increase. So here's the declining price movement here. Shorts are increasing. And we see this sudden drop in open interest, meaning the expectation is that we're going to move higher, because this was a pretty defined range that Swiss franc was working with here. And right as we tip below this low value of the range here, open interest starts to drop. Short positions are closing, and then we get an increase in shorts and longs, and price moves to the upside. And we looked like we were pretty on the 3-year index. So we don't have the data here back on the 6-month index, but this 3-year index looked pretty good, up over 50. The Swiss franc, I don't think you see very much bullishness coming out on the 3-year index. So where are we now? The same story with the Eurofact. They're extremely bearish here. Shorts are increasing. Shorts are moving up. If the expectation is this is going to move higher, we would like to see a drop in these short positions as the shorts start to cover. But as it is now, shorts are moving up. Shorts are moving up. Their expectation is that this is going to move down. WPR in the overbought territory. This is looking really good for a turn at some point. Even if we get a spike top, we gotta watch for it. Okay, let's move on. So we've got this nice link here that brings us back to the main window. I really like that now. High-grade copper was another one that we have been watching quite handsomely. We think that copper may have topped already with a nice even atom top. So let's take a look at copper. This is one that we have really been following in the channel and in the group, and we really like where this is going. So same difference here, right? Or similar. Here's a similar scenario. As price moves up, we get this drop in open interest. The expectation is we're going to move a little bit higher. We're going to cover their positions, and it looks like they're getting back in the game here. Folks are getting back in the game with long positions, and short positions increase too. So it's not just long positions that increase open interest, but as shorts as well. So what we had is right up here in this overbought territory. We just get this spike here in the overbought scenario here. Shorts increasing, comms super bearish, and quite consistently too. As price moves up, comms are getting less optimistic about this, and this looked like it could be topping out here. We got a similar top here. We might be getting a similar top here. This is a bullish chart, but if this breaks down, and I think if we close below here, I'm not going to wait for the confirmation, to tell you the truth. I'm really not waiting for the confirmation. I think comms are going to grab hold of this chart here. Commercial interest, net short positions increase, open interest is up, and this thing is taken off. This thing's taken off to the bottom here. This could sell off. This could get really weak. I know that gold's doing really well. Silver is the so-called metal hero at this point, but I don't think copper is going to keep running. I mean, this is one of the more bearish, negative outlook commercial interest indexes that we've seen in a while, and both the 3-year and the 6-month are just peeling away here, and the short positions are just stacking. So high-grade copper, last month or so, well, yeah, about the last month, we just started getting, I mean, this is starting to shift. So a little bit more of a timing tool here. So generally we don't see a great amount of movement in a single week. But within the last 3 weeks, we've had some really good chart movement here. We'll show you what we're looking at on the 1-hour time frame. This is battle with the 5-day simple moving average. Looks like it's probably getting pinned underneath here. We start breaking down this 20-day simple moving average. We're at the top of our channel, so like as we said in the beginning of this video here, commercial interest is our leading indicator, but it's not our only tool that we use. We like to use a 0 coefficient and a 0 and a negative 2.5 and a 1.0 and a 1.25 coefficient on a channel to see where all the dogfighting's going. See if we can find a control price that makes sense, where there's a lot of fighting. This looked really strong as it continued along this control price and stayed above this 5 moving average, this 5-day simple moving average. And we're up here. We'd like to see this spike come out of the working channel at the 1.25 coefficient, and we had a nice even atom look here. So this might be breaking down. I'm short on this. I'm short on copper. So could we get kind of a triple top look? Well, we still could. I know folks are really bullish on copper right now, and so much so on all the other metals too, but copper not moving in the same way, in the same direction that gold is moving right now. So copper moving down while gold is moving up tremendously. And there's the correlation with the US dollar too. So dollar is down, gold is up. It looks like it's pretty darn correlated. I know some of the guys on bar charts say that there's not a correlated, or they may open up their Friday and say, well, the dollar is up and gold is up. It's not a correlated market, but take a look at the index. We just looked at the dollar index. This thing is getting creamed right now. Stimulus package on Monday, though. Stimulus package. And so we'll see what happens there. So I don't think we need to go into the New Zealand dollar, Swiss franc. We covered the Eurofx, the Australian dollar. Quite a similar scenario here. A little bit of different movement. A little different here. A little different, but not much. Is it enough to warrant any movement to the upside? Australian dollar was doing really well, but bearish within the last month or just over the last month. So, and we'll just take a quick look at the Australian dollar. Yeah, well, similar scenario here. Open interest, moving down. I mean, shorts are covering. Shorts are covering their positions right now as price moves up. And comms were really bullish back here on the Australian dollar, and they have been for some time. They got bullish back here in the 6-month and the 3-year index, and this spike here in net long positions really kind of. So now we've passed through that, right? So these guys have collected. They kind of figured that this would recover, but for us, with if you're a retailer, if you're a retail trader, your pockets aren't that deep. You don't want to wait for that. Here's our 1-hour chart, and I think this is well. The channel working outside the channel may look like it's weakening. This is a better look than the Eurofx because the Eurofx is trading very high within the channel for the short position. So we see in this area 1.25 coefficient. This is a better place to take your profits and maybe catch a short, to the bottom side or to the control price of the uptrend, but risky business, and better to buy down in here. So really supporting this 20-day simple moving average. Hardly a time where we see price move below the 20-day simple moving average, and we box up here in this nice range. And what did that look like? What did this range look like for commercial interest? And how could we have correlated that we were going to move to the upside? Well, here, the range starts to define up here, and we've got open interest just kind of plummet. So the shorts are covering with the expectation that it's going to move higher, and it did. So as price moves up, shorts start to increase for commercial interest. They think that this is going to go the other way, and we're sitting up here in this overbought territory again, looking for some correction. All right, cruising along. Let's take a look next at feeder cattle. Feeder cattle was something that really switched, kind of dropped on a dime here. This is the kind of middle ground. Maybe they didn't, comms weren't really at extremes on 3-month, 1 year, 3-year index. So 6, 1, and 3, sorry. And now we've got within this past week that commercial interest is really showing their hand with a decline in their net short positions. Decrease in their net long positions and a real handsome increase in their net long position or net short positions. So let's take a look at this on the chart. Feeder cattle, where are you? Here we go. So what do we have? Overbought territory. Overbought. Shorts were up. Increasing short positions up in here. Look like a nice rise in open interest. And now we're moving down a bit. The shorts were closing out back here, probably with the expectation of moving a little bit higher. But commercial interest, not a timing tool like we said before, but this is quite a change in sentiment in terms of feeder cattle. So here's our top, here's our top area. What can we work with here? Just passing through this long-term support turned resistance, and we just punched through it, but can't hold. Or our comms thinking that this is they're loading up in the short positions here. Yeah, well, I mean, this is proper, right? So short positions were increasing up in this area, up in this price range, and then we had the move down. Shorts closing out, covering positions, and price starts to move up. So this movement right here could have been our shorts closing, but comms not open interest wise, commercial interest wise, looking really bearish on feeder cattle. Not a very impressive chart to play here either. A lot of gap in volume wise, not a tremendous amount of volume, but this could cut the other way. Are we thinking that this, we're going to bounce around in this range a little bit, and comms are going to get what they want, and we'll come down and retest this support area. Feeder cattle, something to watch, but not one I'm probably going to play. But comms do think that this one's going to turn the other way, so we would like to see this bottom out and then see the shorts increase again. Let's see the open interest increase, dramatically like we do in most cases. Yeah. So look at this hike in the short positions and long positions increase, but shorts are up in here, and this thing turned the other way quite handsomely. We had a lot of market movement though with the pandemic. So where do we start back here? Just about in January. So this got started before the market really decided to turn the other way sometime in March. So boy, but they were getting long back here. And then they closed out their positions just below the extreme, and then they got caught on the other side again. But this spike top bailed them out. This spike bailed out commercial interest here. Feeder cattle, not an impressive chart. Probably not one I'm going to play. Well, that would be nice. So we'll look for a breakdown if you play feeder cattle. I would wait for the short positions to load up and then take your short and see if we've got a range that may turn the other way. Not an impressive chart though. I don't feel like playing feeder cattle. But there it is on the 6-month index, posting zeros on the 1 year, posting below 20. 3-year index, not as bearish as they've ever been, but not very impressive either. So moving down on the 3-year index too. All right, so we've looked at the Australian orange juice. I don't have that on the chart. I don't have the softs on the chart, but there's your cotton. 3-year index not nearly as low. They've been more bearish or negative, had more of a negative outlook, so sitting at that 50% range. Doesn't mean much though. The data is hard to move here, but they are looking like a real negative outlook on cotton right now within the last 3 weeks. So we could probably bring this up. Let's bring this up on bar chart real quick. Let's do. Oh, I'm sorry. That's not. Is that cotton? Yeah, that's cotton. That's cotton. CT. And we're probably looking at the December contract here. So let's just bring this over for you guys and see if this is, worth the OG show. Yeah, boy, they're not screwing around on cotton here. And we are at the bottom of this, and we're just using that 20-day Bollinger Band here with a parabolic SAR, just to see what's going on. And we are at the bottom of this channel right now. So here's here's your shorts increase. Here's your spike in open interest. Here we didn't know where comms were on the 29th. Let's look at the 29th of May. Yeah, right in this area, they were pretty bullish. They were pretty bullish on cotton back in here. So this goes out saying shorts are covering. Shorts are covering. Their expectation is a move up. So we get this rapid decline in short positions covering, and we get this price movement to the upside. So right now, shorts increasing. Can this rebound? They're pretty bearish. So this could start to cut the other way. We are underneath, well underneath the 20-day moving average, and this could start to turn the other way. As soon as we get a little bit of compression, maybe it just kind of peters out a little bit, or maybe this thing just cuts the other way. We had a little bit of compression up in this area before it decided to turn the other way. And look at the amount of short increases here. Look at this spike in open interest. This is a combination factor of net short increase and net long increase, but more so than net shorts. And wow, that really cut the other way. So if you got short here, up at the top end of this 1.2 standard deviation, and you got in on this short, and maybe you got lucky here, but there was a short increases temporarily, but not as high as it's ever been. So there's your cotton. If you're playing that chart, this thing could really start to cut. I'll have to look to the numbers next week. We know where the money is. Commercial interest is net short on cotton. Orange juice, not looking that great, right? All three indexes looking like they're in the red here. And so let's do the September contract for orange juice just to take a quick peek to see if this is what the sentiment really. Well, that's an interesting chart, huh? Yeah, I wouldn't play this one. So here's that rapid decline. Shorts are covering with the expectation of a move up, and we get the move up. And boy, did they really cover here. And we really did get a lot of movement to the upside. So we are in a well-defined range. You're going to have to see something happen with open interest to see if this thing's going to cut down. OJ, probably not a chart I'm going to play, but look at that defined range that it's working with. So, and this is moving down at this point in time. Tough chart to play here. It looks like it's maybe spend some time compressing or consolidating all these gains. Looks like it's been quite violent on the other side of this Bollinger Band, but not a chart I play. OJ is not something I play either. There's definitely way better charts to play. The energy sector, really tough these days. Natural gas just hanging out at the bottom of a range. Boy, I don't, commercial interest, the expectation I think with natural gas has just not been good at all. Has not been good at all. They have definitely held a more bearish or negative outlook on natural gas for some time. We'll take a look at the chart and we'll show you what we see. Natural gas, it's just kind of hanging out in this range, bouncing back and forth between this well-defined range, and com's just not very optimistic about it. Not very optimistic at all. 3-year index back here gave us a little bit of an indication, and this is something we pointed out some time ago with the 6-month index up here for the net long positions, but they've covered here with this spike top, so they've and so now negative outlook, continual negative outlook on natural gas as it just bounces back and forth between this well-defined range. Is this going to cut lower? I'll tell you one thing. TOS did issue an alert probably about 2 weeks ago. Or was last week? And the notion was if you've got an open contract, TOS may not be taking bids for natural gas if it drops below, I think, $1 or something like that, or 1.0. So what we do have at this point in time is open interest declining. This means shorts are covering. So shorts are stacked up here just above the control price, and open interest is declining rapidly. So when we see open interest declining like this, especially near the bottom of this range, the expectation is that there's going to be move higher, and that's what we got. So now we're brushing right up against this this control price once again. Can this move higher? Well, to see how next week opens. The EIA report wasn't that great, but open interest declining, WPR in the overbought territory, comms are bearish. So play the range on this one because it hasn't let me down. On pretty much any time that this has come down, with the exception of this spike down to 1435 here, this has been a nice chart to play if you're playing the bottom of the range and the top of the range, and you're watching your open interest. As the shorts increase, it's time to get out of the pool, right? So, same here. Open interest extremely high. Well, relative isn't even the word I would use for this. With the shorts increase, and they made out handsomely here when we first started to establish this defined range. So, had this downtrend, and we break out of it. We come back down, retest it, and now we're just kind of bouncing around in this range. Natural gas not looking good. Not looking good. And then we'll take a look at crude too. I mean, quite a bit of sideways movement going on here. Look at the short increases happening here with the combination of the bearish outlook that they have been for some time. So price moves up, comms are less optimistic about it, so they increase their short positions. WPR in that overbought territory. Is this thing going to break at some point in time? Boy, we're just right in this gap at this point. Right in this gap. And the expectation isn't a move higher just yet. So we see open interest and the shorts covering here. That's our indication that price is probably going to move higher. Like back here when we see these two spike tops with open interest and then the coverage. And then we get another increase here within these 2 days where shorts increase quite rapidly and then they decline. I mean, usually we don't see the decline so quickly, but the expectation was that the price was going to move up. Shorts are covering, and price moves up. We like to see WPR in that oversold territory over here too, in combination with the moving down of open interest. So, not as optimistic though. Not as optimistic. Crude can be fickle with open interest, but they will hold quite a bit longer than we're capable of doing. So we've got to pay attention to where WPR is, where our open interests are, and also in combination with where our commercial interest is too. So that's relatively the top of our top of the bottom of the list for commercial interest. ZS is one that some of the guys have been playing in the channel too. This has been holding quite to the negative, to the downside a little bit of commercial interest, but not as extreme until these recent few weeks. So just under 20%, but they're starting to change their attitude just a little bit. And if we look at the ZS chart here, let's pull up ZS. This one's been a little fickle. So so we see that movement again, open interest declining. When we see the open interest declining, and we've got some still a positive outlook here, the expectation is that the price is going to move higher. So we bottom out here with open interest with the expectation of price moving higher, and boy, we get quite a stir here. We get quite a bit of movement to the upside, but comms, this price is moving up here. Boy, a tough pattern, but we got another Adam Eve type, top above this support area. We know that shorts are increasing here We know that WPR is up in the overbought territory, and comms are holding underneath that 20% mark. They did change their attitude a little bit in 2 weeks, and then within the 2-week time period, we did see a little bit of bounce off that support area. So, boy, with these shorts increasing, I don't know how much higher this can go, and I would be cautious of taking out this high, taking out this swing high, and then breaking back down through. So we get kind of like a throwback pattern here until we see something like open interest, declining, the short positions covering before we get a move up. Not a timing tool, but we know where the money is right now, and the money is placed from commercial interests on the short side. So their net shorts really increasing here, really increasing. All this bearish, but look at all this bearishness in the market right now, quite a bit. And then the middle of the pack here is not really as impressive. So even gold coming down a little bit, but we know that that gold has been on quite a tear right now. 3-year index, it's been in a bull market for the last 3 years. So I doubt that we're going to see 3-year index numbers that post as high as they were 3 years ago on gold, when they got really, really bullish on gold. And it's been an impressive chart to watch. So not quite in the extreme territory, nothing to be too concerned about right yet. Buyers keep buying. They keep driving gold up. Silver was the one to watch. Silver was definitely the one to watch, because I don't think comms really ever get that bullish in the 3-year index. We see numbers like this in the 3-year index, and this for silver is bullish as all heck. So let's pull up the chart here. This is one that I missed. Admittedly, this is one that I missed, and I wish I didn't miss it, but boy, I really wish we didn't miss this guy, because we had this well-defined range happening right here. Short positions are closing out here with the expectation of a move higher, and this was the indication. Defined range, open interest dropping, commercial interest super bullish in this territory on the 6-month index, and we get up above the 50% mark on the 3-year index, which is something we don't generally see with silver. And when comms get bullish on silver, it's going to run. So we missed this one. Comms coming down a little bit. Is anything to be concerned about, like it was back here when they were holding a very negative outlook, and then we saw that price move it to the downside. But this happened right around where the pandemic was, right? Open interest declining, shorts are covering, and then there's that rapid increase in short positions with WPR in the overbought territory, and the expectation was to move down. So this was the key indicator back here for commercial interest on the shorts. And then this is the one we missed. The one that got away here was this defined range. Shorts covering with the expectation of moving higher, and we moved up. So we've got a nice hike in short positions right now. Comms not at extremes. How much higher can silver go within the last year? We'll have to watch these guys in the upcoming weeks, but as they start to decline, watch for a defined range and an increase in short positions. So this may come down before it comes back up here. Can it move higher? We don't, higher than the current price range as possible. WPR overbought, shorts increasing, comms sentiment increasingly decreasing. It's decreasing here. Net shorts increasing a little bit, but they're not quite as, they're not at extremes. Not at extremes. We like to see the extremes on silver. The one we missed, but there it is. There's silver. Oh, what else has been a really good chart? Let's look at the bottom or the top of the list. So, not a very impressive top of the list. So we looked at the U.S. dollar index and posted new highs. Anything that's sitting at 100 is is a new high. S&P within the last 5 weeks was posting new highs, and they've come down a little bit, but they're still S&P. Commercial interest, all three indexes. I think the expectation is that the S&P is going to move higher. Dow Jones, though, or if the Nasdaq crumbles, though, you could say goodbye to this sentiment, to this idea that the S&P is going to climb. Because, ladies and gentlemen, the U.S. economy is not doing that well. 40 million unemployed workers in the United States. Don't know where all this money is coming from here. So we did get a lot of selling off on the Nasdaq, but I mean we're not at all-time highs here. We're not at pre-pandemic all-time highs on the S&P, and they're really bullish. Comms are really bullish on this right now. And as this one we missed, so we had a defined range here. Excuse the the length of the box, but we had a nice defined range back here before it broke. Shorts increase. You'll see shorts, spike in shorts. And then this declining open interest, which suggests that there's going to be a move higher. And we did get a move up. Shorts increasing. And then we get these shorts starting to close out, starting to cover here. And within this range, this decline in open interest is what WPR oversold. Declining open interest with the expectation of moving higher. And we did get some movement to the upside. Is this... Boy, I mean, I like to see comms up over the 80%, but where is our open interest? Is kind of flattening out here. Tough to say. WPR in the overbought territory. I mean, if the Nasdaq goes down, this is going to go down. And let's just take a quick look at the Nasdaq when you have to look at the numbers, because I know what's been going on with the Nasdaq lately. This is one that I've been playing. I would like this to be an Adam and Eve, or an even Adam top, double top, M top, and the Nasdaq starts to peel away. But in this level above 11,000 here, almost 11.1, just about where we doubled, we did see an increasing negative outlook by commercial interest. So shorts are up in this area. Shorts are up. Open interest declines sharply with the expectation of price moving up. So we've got shorts increasing dramatically here. Comms are bearish with the open interest increase. WPR in the overbought territory. Both here and here. Is this thing going to break? And I think it would probably be wise to just kind of pull up our 1 hour chart. Where is it? Here it is. I mean, this is something we're looking at, something that we were predicting. It hasn't broken yet. And the hypothetical is that this 20-day moving average, simple moving average, has held up throughout this entire bull stretch here for the last couple of months, last several months. Are we getting trapped underneath there, or are we going to see another run up at these highs for a little triple top action before this breaks down? My first intuition here was that this was going to break down, and if we close below this 10357 mark here and get pinned underneath of it, and we find rejection at this value low range, that we're done here, that we're done on the Nasdaq, and that this is the top. Doesn't mean it will. I mean, 20-day simple moving average is, innocent until proven guilty here, but are we going to start to get some movement to the downside? American economy not doing as well as one might think. We'll see what happens with that helicopter money coming in on Monday. If the dollar is strong and people are taking flight to the dollar, they will not. I do not think that they will be as interested in driving the Nasdaq price up in this unbelievable, moronic uptrend. I mean, this is just unprecedented, right? Unprecedented. And Microsoft posted good numbers, but we'll see. We'll see. In the upcoming week, we're going to see if this is the double top we were looking for, or if we're going to come up and maybe triple top it before we break down, or maybe this thing is, not a bad place to be a buyer, I don't think, because on the 20-day simple moving average, this has held the test of time so far. But this is one look that we haven't seen yet, which is this, this double top. We were able to peel away from this previously and then find ample buying opportunity more and more and more along the 20-day simple moving average. So one to look at, one to watch. But my expectation was that this was going to sell off here at the. Well, we got lucky. Intuition said, "Well, this could be a double top," and we got in here and we made some money. Dow Jones not looking nearly as impressive. We'll take a quick peek at that. Dow Jones here. Where are you? Not as impressive. Not as impressive here. Let's get back to commercial interest and find out what they're doing. Still holding 3-year index. A little harder to move, but the 6-month index not as good. Not as good as the S&P. Not as good as the Nasdaq. Could we rattle around this range for a little bit and then we find it's something to work with? Shorts increasing here. The dip in open interest gives us that indication that shorts are closing out, and then with the expectation of moving higher, and we move higher. Shorts are up a little bit here. They're a little higher than just previously. Not at extreme highs, like they were back here. But here's your 6-month index back here. I gotta think that these guys got lucky or got a head start on this, because back in February, shorts were up. 6-month index was below the 20% mark, and these guys really took it the other way. So shorts decreasing with the expectation of price moving higher, and we get the movement to the upside. So our shorts are increasing again here. The move down in open interest with the expectation that price will move higher, and it did, but not in the way I think that they were looking for. Perfect timing too, right? If the expectation is to move higher, we're in the oversold territory, and then we move up a little bit. Similar scenario back here. WPR, oversold territory, and then here's that hike. In net long positions, they really got ahead of this one, huh? They really got ahead of this one. They knew exactly where the Dow Jones was going to turn. All right, we covered the S&P, we covered the Dow, the dollar, we covered the other two indexes. Do we want to look at the Russell? I mean, the Russell is just kind of doing so here, right? I mean, there was a brief period of time where it looked like it was getting pretty bullish, probably because the Nasdaq was driving it up. But I don't think that the Russell has been looking that impressive as of late. But I mean, a good play nonetheless. So quite similar here. Yeah, once again, open interest declining, comms getting bullish, WPR in the oversold territory, and there's that expectation. But all the indexes look pretty similar, but the Russell not looking nearly as impressive, like the Dow Jones not looking nearly as impressive as the other two indexes. All right, let's get back to it. Top of the list. We've covered most of them. One that I did want to look at was the Mexican peso here. I definitely wanted to look at the Mexican peso because this has been just really bullish for some time here, holding their net long contracts on the Mexican peso. But let's take a look at this chart. This has been a really interesting chart. Commercial interest not a timing tool, but they're just not giving up. Not giving up on this, on the Mexican peso. And it didn't look impressive, right? Not much to work with, but comms really holding the pattern above the 80% mark, so still really bullish. But look what the open interest is. Really low right now. Really, really, really low. Tough to gauge what's going on with the Mexican peso and if this thing's going to really run up and challenge, maybe some long-term, I wouldn't say long-term, but some support area up in this range. But it hasn't broken down, and comms are still pretty optimistic on it. But boy, this open interest is really tough to. I mean, besides this decline with the expectation of price moving up in this defined range, we haven't really got it. So what I would like to see is a really sharp, at least a decline or a sharp decline in open interest here before this really starts to take off to the upside. So COM's not a timing tool, and they are really holding on to this one for some time period. So I guess not a very impressive chart to play, but at least there's the range to work with if you're really interested in playing the Mexican peso. I'd like to see it take off. I'd like to play it, but I'm not. There's definitely more interesting charts to play. So we've covered the peso, platinum. I think it's been on a pretty good tear lately. Let's look at platinum. Pretty good. Pretty good. Pretty impressive. Let's get rid of this here. What are we working with? What are we working with here? Oh, well, that's pretty obvious, right? So, a couple of unimpressive candles at the top of this. COM's, really bullish on this. This was the turning point, right? This was the turning point. Shorts are loaded up here. Shorts are loaded up. 3-year index, not looking stellar. I mean, this is back in January before all the shooting started with the pandemic, crap. And WPR, overbought territory. Shorts are up. COMs are bearish. And, well, they got lucky, right? They got lucky. Who would have thought? So price moves down. Commercial interest gets really bullish back in this territory, and lift, press, hold. And these guys they got lucky, huh? Or did they know what was going on? Because this hike in open interest within a 5-week period was tremendous on platinum. And if you got it back here, shorts covering with the expectation of price moving up. And look pretty good. Shorts covering here with the expectation of price moving up. Price moved up. COM still bullish. WPR, oversold territory. Oversold territory. So what are we looking for now? So it looks like shorts are increasing up here. Shorts are increasing. But COM's bullish. So let me close down here. Will the expectation be, this retraces a little bit. Shorts start to cover with the expectation of moving up. We don't have a defined range, though. What we have is a spike top, so this is kind of hard to work with here. We'll watch in the upcoming weeks, and then we'll report back, but COM's really bullish. Shorts increasing. WPR, overbought territory. All right. Moving on. I know this is getting long, this is getting lengthy, but we wanted to get this out here. So, hopefully you put something in the oven and had this on in the background, and we mentioned a title that you're really looking forward to look at, or that you're playing. Corn. Let's definitely take a look at corn, because this was an interesting chart to me. I thought corn was great. I think corn can start to move eventually. I think we got this nice sell-off, but COM's, look at that. Well-defined range. Commercial interest getting really bullish on this, and towards the tail end of this, both times, shorts closing with the expectation that, or shorts covering with the expectation of price moving up. COM's getting bullish simultaneously, and we did get some, we edged our way up here until we got up into this range. So we got right underneath that swing right there. A pretty long-term support, at least for a couple of months before it broke down. COMs were really bearish back in here, right? COMs really bearish in the 6-month index. Expectation is to move down, and they got it. But, again, pre-pandemic there. I think this can start moving the other way with, unless they start to, I mean, just moving down just a little bit. Should probably, cover in here. Covering their longs, selling out, closing out their long positions here. So what we got is open interest increasing here. Increasing open interest. We'd like to see this drop down before maybe corn makes another run up, as long as commercial interest stays bullish here. WPR oversold. There it is. There it is. So if you're playing corn, I may keep on the lookout for for the time being. But haven't looked at the British pound in some time. There's a Canadian dollar, a little bit lower on the index. Let's take a look at the Canadian dollar real quick and see what we can see. See, not as impressive as a move as we saw on the euro here. And there's that long-term support. Turn resistance. So they're going to try to breach and come after these, some short positions here on the squeeze. But, oof, look at that. Spike in open interest. Spike in the short positions. Load it up. And then we start to close out as price moves down with the expectation of price moving higher. Right there at that spike. And then we get a similar movement here. So not exactly a defined range, but at least shorts covering here. Shorts covering, and then the move up in open interest. So the expectation that price is going to move up didn't move up quite nearly as well as I thought, I don't think. But WPR in the overbought territory, shorts are up, and comms starting to come down quite a bit here. So Canadian dollar could see some downside movement. And so we might rattle around this. So we have a nice, well-defined range. So, and we know shorts start closing within this range. Maybe the expectation is a move higher, but we gotta see how next week opens up with the money being pumped into the system here. We can take a look at the British pound too. Let's take a look at the British pound. Not as impressive. Not as impressive here. Not as impressive. Just sitting right underneath that range. But the more time they peck at it, maybe they can get up in here. Maybe they can get up in here. Try to squeeze these guys. Well, they got really bullish back in here, right? Open interest moves down with the expectation of price moving higher, and as it goes with all the pandemic business. Boy, I'm not. I don't really feel like playing this. Not a trending market here on the British pound. I haven't been playing it very much. Not to say you can't make some pretty good money here, but WPR overbought. Overbought territory, a little concerning, but open interest moving down a little bit here. Shorts cover with the expectation of moving higher. Maybe they change their sentiment, but as it is right now, it's just not. We're not at extremes, and we were extremes back here, so this was nice. We just start crossing the 80% range. Value low on the channel. Perfect time to be a buyer, and then there was your money maker. Shorts increasing, shorts covering on the way down here. Expectation of moving higher, and it moves higher. All right, that's that. That's the British pound. I'm glad we looked at that. And you may say, Para, why are you not looking at the financials? I generally don't. But we'll look at ZT to see what's going on here. 2-year notes looking quite a bit more bullish, or at least positive on the outlook from commercial interest, but it's just not a chart I play, guys. I don't. I wish I played it back here, but I don't. I think that there's better volume on other charts. Not better volume, but I mean, look at this range, right? Yeah, I don't know. Unless you catch something like this. Let's see. Oh boy, yeah, if you caught it here on the on short coverage, and you were lucky enough during the pandemic era time frame here, and you anticipated, so you're anticipating this move and then the break, the support that it found the gap up, and you join this trend, and so you're waiting to participate in this, and we finally get a break of that 108, and then away we go. But not a chart I feel like playing. Where are we gonna go with this? Boy, I really don't know. I really don't know. I think I'm getting the end of my talking here. So we're about into the hour here on this, and boy, I hope we got something here. I hope we got something here. Wow, look at the change in sentiment here. So that's what I like to see. 5-week prior ZQ. Let's take a look and see if this chart looks any better. No, it doesn't. Not a chart I'm playing. Not a chart I'm playing. And we don't even have. I don't even think we have the data for commercial interest here loaded, and I'm not really sure why. ZQ. There must be something going on with the indicator. That's the first time I think I've looked at that too. So that's it. That's it for the extremes here. The highs and the lows on the index. Below 20, above 80. Thanks for tuning in. Thanks for stopping by. Thanks for leaving comments and likes and all that good business. We really appreciate those. Stop by the Discord channel. I'll see about posting that link in the description below. Come talk to us. Discord channel is just our community chat group. I post my trades. I post my charts, my logic, which is significantly more than we can display here, being that this is only a commercial interest video. I hope this is helpful. If you're looking for the report, drop me a line in Discord, send me a direct message, or come hang out, talk the charts, talk fundamentals, talk commercial interest, come talk about Larry Williams' spin on things. Come tell us that commercial interest is a joke if you want to. Come and tell us that like so many other analysts on that are supporting their own analytics, that commercial interest is a joke and you shouldn't follow commercial interest because they would never show you their ace card. I beg to differ. So thanks for tuning in. I hope you find yourself on the profitable side of the trade, and we'll see you again on the next video.